Brian Sullivan is at the Gas Tech Conference in Houston with ConocoPhillips CEO Ryan Lance. Brian, take it away.
Thanks, Mike. And I know a guy named Michael Santoli who's been talking to us about sort of investor distaste or dislike for a lot of the oil and gas companies that are out there as the price of oil goes down. So let's dig in a little bit more with Ryan Lance, Chair and CEO of ConocoPhillips. Ryan, thanks for joining us.
Thank you, Brian.
On paper, oil traders are net short oil for the first time in ever, or at least a very long time. Do you agree with the market's bearishness? Everybody just hates oil all of a sudden.
Well, we know the price is going to be quite volatile right now. And there's a bit of overhang. There's some demand concerns coming out of China. Demand concerns is the U.S. even slowing down a little bit in other areas around the world, combined with an overhang on supply side with some spare capacity sitting in OPEC plus, some growth coming out of the U.S. and some growth coming out of the non-OPEC, non-U.S. sector as well. So, yeah, it's created a dynamic that it's trading at a lower end of that volatility range than what we would have expected. So, but this too shall cover. The demand will recover, supply will get self-worked off, and I think we are pretty constructive as we go forward over the next few years.
Does $68 a barrel, I'm talking about WTI, does $68 oil versus $72 oil determine what ConocoPhillips does with its capital?
No. We look at a mid-cycle price that's even below prices that are occurring today. We make sure our plans are robust. We can invest across the cycles to do that. We have the balance sheet available to invest through these cycles and do that. And we know these consistent investment programs are right rather than following the market up and down. And look, we're building a company for the next 2 or 3 decades. We know oil is going to be around for a long time. It's going to be important, oil and gas both, the fossil fuels. So we think long term in this business. The cycle times are longer in this business. We don't get caught up in what's going on a day-to-day basis.
I don't think 10 years ago anybody said to me or on CNBC there will be a day soon where U.S. natural gas will be keeping the lights and the heat on in Europe. We're literally, I don't know what the German word for derriere is, that's the French word, you get my tone. Did you think that we want U.S. natural gas would be saving much of Europe?
No, we couldn't have imagined what's happening today. And that's what we're blessed with, a huge amount of supply and natural resource here in North America, primarily here in the United States. And that's the opportunity that's in front of us, that opportunity to keep our energy prices low with the growing power demand and the electrification that's coming, and the opportunity to export that to our allies. The shale revolution in this country has been truly remarkable, and it's revolutionized our business, our industry, our company, as we think about the next 5, 10, 15, and 30 years in this business.
It didn't get a lot of attention because it wouldn't, but the California electric grid, which is not just California, it's Western U.S., last week, I think it was, made a deal with an energy provider in South Dakota starting in 2026 to import more electricity from South Dakota and Wyoming to California. Much of that will be coal powered. So I'm thinking to myself, California might be adding more coal generation to its capacity, or at least it'll help out in a couple of years. With all the gas that we've got, all these other hydrogen, nuclear, how did we get here?
Well, yeah, what's interesting, the power demand has been relatively flat over time, and it's allowed us to take these old coal-fired power plants and some of the old combined cycle gas plants out of business. Now, the power demand is growing. AI, it's growing just because of the economics are growing, and the energy expansion needs in the United States are going to be enormous. And it's going to take all forms of this energy, and that's why you're seeing some of these crazy things like you just described going on in places like California, because they need to keep it a reliable source of energy and need to keep it low cost for the consumer. And to do that, you're going to need all these advantages. You're going to need renewable. You're going to need coal. You're probably going to need more expansion of the oil and gas system as well. Probably more nuclear over time as well, because that expansion is significant.
Well, we finally had a plant open up, but you get my point about California. I'm not picking on my former home state, but we're talking about getting more power potentially from coal into California. Just mind-blowing. Very quickly, you might have heard that tomorrow the Federal Reserve, Ryan, may cut interest rates for the first time in years. 2 o'clock Eastern, power lunch, the decision. You guys are a capital-intensive industry. Does it matter to you if the Fed goes 25 or 50, given that you borrow and spend billions of dollars a year?
Yeah, not much, Brian. I mean, it matters to us because we want to see a healthy economy in the United States. So certainly the unemployment rate has been a problem. We've We're trying to manage through that. I know the Fed was trying to manage through that whole system a little bit. We understand that. I think what's important to us is positive economic global growth around the globe and underpinned by what's happening here in the United States. So it's probably time to do something, whether it's 25 bips or 50 bips. Doesn't make a huge difference to our company. Again, we invest through these cycles, and we're investing for decades to come. And that's what's important to our company and the growth in its development.